Today, as he walked toward that podium, we all thought we knew the script. The markets had priced it in, the numbers were on the table. But the moment Powell leaned into the microphone and delivered that first sentence, it became about more than just a number. It wasn't just math anymore. It was about how you steer a massive ship when the storm is finally beginning to subside, but the waves are still high. Yes, the decision was made. A 25 basis point cut. On paper, it's a simple quarter of a percentage point. But this quarter point whispers a very specific message to us. It says, we are no longer slamming on the emergency brake. We are gently lifting our foot off the pedal. That is the reality hidden beneath the cold, distant language of economic management. They are lowering rates because they believe the inflation monster, that fire that burned through our wallets over the last few years, is finally under control. Or at least, they feel safe enough to put down the fire extinguishers for a moment. However, in the subtext of today's meeting, in those critical moments we watched in the video, there was far more hidden than what made the headlines. Powell's voice was calm, but his message carried a tension, a cautiousness about the future. Look, do you know what one of the most critical details was? It wasn't just the rate cut. It was the announcement regarding the balance sheet. They gave a date, December 1st. This is when the process of shrinking the balance sheet stops. What does this mean? It means the central bank is stopping the process of vacuuming money out of the market. They aren't necessarily opening the floodgates wide, but they are stopping the water from swirling down the drain. It might seem like a technical footnote, but for the blood flow of the financial system, this is a vital decision. It's an admission that the system needs to breathe a little easier, that it needs a bit more liquidity to function smoothly. Now, let's get to the heart of the story, the core of this 6-minute monologue, the future. Did you notice his expression when he was asked that inevitable question? What will you do in December? Is another cut coming? Everyone, the investor, the homebuyer, the business owner, wanted to hear a resounding yes. But Powell put on that classic central banker armor and gave us neither a yes nor a no. Instead, he invited us into that gray area called the data. He said, "We are not in a hurry." That sentence is crucial. Why aren't they in a hurry? Because the economy is still remarkably strong. And ironically, the strength of the economy is exactly what is confusing them the most right now. Think about it. They raised rates aggressively, they made borrowing expensive, they squeezed the market, yet the labor market is still standing. People are spending. Companies are producing. Under normal circumstances, this is great news. But for a general fighting a war against inflation, this means the enemy still has ammunition. That is why Powell says, "I cannot promise anything for December." Because if the economy stays this hot, instead of getting off at the next stop, they might just keep driving the bus. Meaning, they might pause the rate cuts. There is a very delicate balance here. Imagine a tightrope walker. He's walking across the wire with a balancing pole. On one end of the pole sits inflation, and on the other sits unemployment. Powell is standing right in the middle of that rope. If he cuts rates too fast, the inflation side gets heavy, and the beast wakes up. If he waits too long to cut, the unemployment side gets heavy, and the economy falls into a recession. For those 3 minutes in the video, Powell was essentially describing how he intends to stay on that rope without falling. He mentioned another concept, the neutral rate. This is that magic level where the economy is neither heating up nor cooling down. But the problem is, nobody knows exactly where that level is. Powell doesn't know either, and he doesn't shy away from admitting it. He's telling us, we know we are getting close to it, but we'll only know the exact location when we get there. It's like driving a car on a foggy road at night. Your headlights are on, you can see the asphalt immediately in front of you, but you won't know how sharp the curve is until you are actually in it. That is the mode the central bank is in right now. They are slowing down because they know the destination is near, but they can't afford to crash by driving too fast in the fog. So, what does this mean for us? For the average citizen? It means the months ahead will be choppy. The central bank is no longer on autopilot. They aren't saying, we will cut rates at every meeting. They are going to look at the unemployment data every month, the inflation numbers every month, and redraw the map accordingly. This means uncertainty for the markets. When Powell said, "The journey might be bumpy," this is exactly what he meant. The stance we saw in the video, the choice of words, showed us one thing. It is too early to declare victory. Yes, inflation has come down, but they are not ready to hang the mission accomplished banner just yet. Specifically, the combination of stopping the balance sheet runoff and the rate cut is a gear shift. The car is still moving, but we aren't coasting downhill anymore. We are trying to transition to a flat road. In conclusion, the story Powell told was a story of caution. It was a message saying, "We are here, we are watching the economy, we will intervene if necessary, but for now, we are easing off both the gas and the brake." The next 6 weeks, the time between now and the December meeting, will perhaps be the most critical period of the year. Because when that day comes, when the data is placed in front of Powell, he will either say, "Okay, let's keep going," or "Wait a minute, let's stop here and look around." That is the summary of that video, of that press conference, and the future scenario it whispered to us. The uncertainty hasn't ended, it has simply changed shape. And now, we have to adapt to this new shape, this new, data-dependent world.